Let's move over to the new Fed chair. I noticed that Jerome Powell on his way out was honored by the Kennedy Center Honors Brave Courage Award. And I keep hearing that the new Fed chair label wants to lower rates. Should we wait for the rates to drop before we make any big money moves at this point, or do we continue as we have been when Jerome was in the chair?
That's a hard question. That's a very hard question. It's one that keeps me up at night. So as the portfolio manager for the ETF YFYA, which is the Yields for You Income Strategy A fund, this is the question that I have to constantly answer: is where are interest rates going to be? Is the Fed going to lower or raise them? And the reason why it's so important to kind of know this answer ahead of time is because the second that the market believes with a fair amount of certainty that something is going to happen, then the market moves as if it's going to happen, right? And so the interest rates will effectively go down or they'll effectively go up. And if you're on the wrong side of that transaction, you either lose money or you make a whole lot of money, right? And so the real question is, and this is the question that I ask myself, and it's what every investor who's living on a fixed income needs to ask themselves, is how can I take the least amount of risk possible to get the greatest return, especially on my safe money, on my low risk money, on the money that I can't afford to lose too much on, which is what the YFYA was built for. And so when we look at that first bucket and we're looking at interest rates, Jerome Powell was very clear that he wasn't certain that lowering interest rates was the right thing to do. There were various Fed governors for the last year and a half, on both sides of that argument saying about lowering interest rates. But the problem is, and this is, the Fed's got two mandates. They got to make sure that we have healthy employment, and they got to make sure that we've got healthy employment and we've got healthy money flows. And those are difficult things to, that the economy is growing at the right pace and that we've got a healthy economy and a healthy employment. And those are right now very weird things, because for the last year and a half, we've had employment was shrinking, but the economy was growing. And now we have, for the last 3 months straight, it could still be revised, we've had stellar growth. So we've had growing employment and growing GDP. However, inflation has been on the rise, right? And so inflation has really been on the rise, very much due to what's happening in Iran and the Middle East with the Strait of Hormuz. However, there's a lot of other factors in play, right? And so the Fed is balancing this question of, do we raise interest rates to reduce the money supply, to reduce inflation, to help make sure that the economy can keep growing? And so Kevin Warsh, his stance before taking office was that he wanted to reduce interest rates. That's why Trump went and put him into power, right? Who, pushed for him to be in there. We had a number of Fed governors who wanted to reduce interest rates. In the last two Fed meetings, we've had a number who said that it's time to talk about raising interest rates. So I would not bet on interest rates going down until we see them going down. And it is a very weird place to be in, because if you bet that interest rates are going to go down, that means you have to take more risk in your portfolio because you have to chase things that are going to give a greater return. Right. And if the rug gets pulled out from under the economy, either because of the Strait of Hormuz and all the damage to the oil infrastructure that happened in the Middle East, or because we have this AI bubble and it collapses, or because we have interest rates rise and all of a sudden all the free money or the relatively low interest money that is being used to prop up the economy disappears, what happens? Right? What happens to your retirement savings? So the stock market right now, a lot of the growth it's tied to two things. It's tied to AI, and it's tied to the fact that interest rates were going to come down. Part of the reason why the market went down so much, the Nasdaq went down 5% in a single day, was we got a good job reading that day, and there was trouble in paradise when it came to AI, like a double whammy. So when you ask the question, should we act as if interest rates are coming down? I wouldn't count, what's the expression? I wouldn't count my chickens until they hatch, right? So I wouldn't hold my breath on that one. I think that we've got an equal probability of increasing interest rates as well as lowering them. I'm still betting that long term there's going to be growth. And so I would like to be more aligned on the interest rate spectrum with companies that are on the growth side of things. So a little bit more riskier than lower risk, because when you look at the credit spread, right? Like not the credit spread, but when you look at the credit quality of companies are using money responsibly. They're not over leveraging themselves like they were in 2008 or 2000, really the dot-com bust. We're seeing people be responsible. So I'd rather go for like a middle company that can't get best interest rates, right? They're not a Microsoft, but they'll get, they have to pay 6-7% interest rate right now to get a loan. I'd rather get that 6-7% than putting it in the stock market necessarily, where I can lose the 50%. At least on a bond, like I'm not going to lose 50%. I still get my principal for the most part.
So is that the answer when the Fed chair can't even tell you which way the rates are going to go? And we're talking to yieldsforyou.com and other advisors out there. What are we supposed to do? I mean, I saw a sale label on crystal balls. I was concerned about purchasing that too.
This is a reminder, right? It is a very much a reminder that the market is driven by people and not by facts, right? Everyone has got their crystal ball and they're trying to peer into the future to see what is happening. But fundamentally, right, the market is moved by buyers and sellers. It's not moved by fundamentals. It doesn't matter how much revenue SpaceX is making. It doesn't matter that it's pricing as if it's going to make the 100 times earnings, right? Like that's an insane amount for a company. I think like Google's 12x or something, and SpaceX is 94x, right? Like these are insane numbers for companies, but at the same time, the price is moving, right? There are more buyers than there are sellers, and that's making the stocks go up. And that's human nature. That has nothing to do with fundamentals. And so we're just bringing this back to SpaceX and the IPOs. We've got Anthropic and we've got OpenAI who are on deck for IPOs. We've got a few other companies that are coming for IPOs. These companies are not trading based on fundamentals. We don't have institutional investors who are like, you got to prove that your business model works. You got to prove that you can bring in the revenue. You got to prove to us that this, $1 trillion company can actually produce $1 trillion in revenue. All these people have to prove right now is that their aspirations are life-changing for humanity, and that they have some shot as making it happen, right? Elon Musk, he made as part of his package with this whole IPO, he made part of his package that he's going to get 1 million people on Mars. Do we think that's even realistically possible? Like, if you just sat for a second and really thought about it, right? Like, the amount of just the amount of money it would take, right, to build an infrastructure to support 1 million people on a lifeless planet that can't even produce oxygen, right, and to get them over there, right? Like, even right now, if we want to travel to Mars, is only once every 3 years that it's aligned so that we can have a short trip. And a short trip for that, I think, is like 6 months or 9 months, right? That's an insanely long time. Like just to keep someone healthy for that long in space is almost impossible. But we're betting on it. We're betting, right? Not the world, but enough people in the market are betting that Elon Musk can make that happen. And even if he doesn't make that happen, that he's going to get something so close that it's going to be a moot point, right? And is he capable of doing that? Probably. Who knows? I think he's definitely capable of inspiring enough people to make that happen. And that's really at the end of the day, the question we got to ask ourselves is not, is he capable of making $1 trillion or, whatever the next number after that is, but is he capable of inspiring enough buyers to buy his stock to make it worth more money? And I think the answer to that question is yes. So.